Hey guys, it's Eric at Solution Prep. The new student loan rates are out for the 24-25 school year, so we're going to dig into them, starting with the direct student loan. The direct student loan is available only to students who are U.S. citizens and fill out the FAFSA, the free application for federal student aid. And this year it is up from 5.5% to 6.53% for both the subsidized and the unsubsidized loan. Now, the difference is that for a subsidized loan while you're in college and for 6 months thereafter, you have no payments due and no interest. But for the unsubsidized loan, you are responsible for making interest-only payments while you're in college and for 6 months thereafter until that principal and interest payment becomes due. Now, they will give you the option to defer that interest, but that will then add to your debt and it will compound the interest. So you'll wind up owing a lot more money than you borrowed, which is why I recommend paying as you go. Now, this does come with a 1.057% fee, which has not changed in years, and they pack that in, which means if you borrow $1,000, they're going to keep $10.57 of that and disperse the rest of the money to the college, but you'll owe the whole $1,000. Now, for freshman year, you'll be able to borrow up to $5,500. And that's typically broken down by term. So if you go to a school with a 2-semester school year, you're going to see $2,750 for the first semester and $2,750 for the second semester, both in your award letter and in your online portal for your college. Now, up to $3,500 of these $5,500 may be subsidized as determined by your need from the numbers you put into the FAFSA. And these are government dollars, so you really can't negotiate with it. It just is what it is. And the difference between the total $5,500 and whatever portion of that $3,500, some, none, or all, is going to be unsubsidized. And you can choose to only take the subsidized portion, or take less, or take more, or take all of it up to that $5,500. But sophomore year, you'll be able to borrow up to $6,500, up to $4,500 of which may be subsidized based on need. For junior and senior year, you'll be able to borrow up to $7,500, up to $5,500 of which may be subsidized. Now, these are the numbers for the dependent students, which means that, you're under the age of 24, you're not married, you're not in the military. There are higher numbers that can be borrowed for independent students, but generally speaking, I'm working with high school students going into college, so that's where my focus is going to be in this conversation. The total amount you could borrow is $31,000, which is, if you're counting, about 9 semesters, up to $23,000 of which could be subsidized. So if you complete college in 4 years, you're looking at $27,000. And you get 10 to 25 years to pay it off, and there are lots of different payment plans I'm not going to get into today, but I want you to know that there are no prepayment penalties. So if you can pay it off faster, you will save money in the long run. Then there's the NJCLASS loan. It's considered a family loan because both parents and students can borrow it, but considering, again, that I'm working with high school students going into college, really it's only available for the parents, and I'm going to explain to you why in a moment. First, let me tell you what's changing. There is a 10-year, a 15-year, and a 20-year loan option, and just like a mortgage, the longer the term, the higher the rate. This year, the 10-year loan is up from 5.69% to 5.99%. And with this, you have to make immediate repayments. So 45 days after dispersal, payments are due. With the 15-year, it's gone up from 5.89% to a much bigger 6.99%. But on this 15-year loan, you can choose to make interest-only payments while you're in college. So there's no compounding interest because you're paying as you go. Then for the 20-year, it's gone up from 7.49% to 7.99% this year. And with this, you can do full payment deferral while you're in college, but I don't recommend it because then the interest is compounding. Now, again, the 10 and the 15-year, you got to start making payments 45 days after that loan is dispersed, meaning paid to your college on your behalf. Whereas with the 20-year loan, it's 45 days after you stop going to college, ideally via graduation. Now, there is no loan fee for any of these. It used to be 3%, but as of last year, this fee is gone. So what you see is what you get, and that's kind of nice to know. But you can borrow this up to the cost of attending. So if you have gotten grants, if you've gotten scholarships, if you've paid what you can afford, if you've already taken out that maximum direct student loan, $5,500, $65, $75, $75 for freshman, sophomore, junior, senior year, then any bill left over, you could theoretically borrow the last dollar with this loan. You have to have a 670 credit score to be eligible for it, and you got to have at least $40,000 of income. And that's why, generally speaking, high school students going into college are not really eligible for this. It's just going to be the parents, but certainly adult students who are going to college, who are returning to school, they may have access to this as well. And that 670 is not based on like Experian, Equifax, TransUnion. It's based on their own internal calculation, some private company they use, and it's a lot more opaque, I'm sorry to say. And again, there's no prepayment penalty, and a little bonus here, if you're on the 10-year payment plan and you let them do auto pay directly from your bank, you can reduce that 5.99% by a quarter down to 5.74%. You know what? I'll take whatever savings I can get. Then there's the Direct Plus loan, also called the Parent Plus loan. And this is available, as you guessed, only to parents. And that Parent Plus loan is up this year from 8.05% to 9.08%. With a 4.228% fee that has not changed in the last few years. That's a lot more expensive, and generally speaking, because most of my students are coming from New Jersey, I would encourage you to take out the NJCLASS loan, which is available to students from New Jersey and parents from New Jersey going to college anywhere in America, not just in New Jersey, whereas this Direct Plus loan may be available to families in the other 49 states who don't have access to the NJCLASS loan. And of course, when you borrow from the government, you have very flexible repayment terms. They will work with you, whatever your circumstance, to make sure that you stay in good standing. And there's always the possibility of getting some loan forgiveness down the line, whether it's a blanket loan forgiveness that's applied to all borrowers, or whether it's just for people who go into teaching or become medical professionals or otherwise serve the public good. There are things out there. Now, there are also, of course, private loans. But what you have to understand about private loans is they're not flexible about the repayment terms. The bill is due. The bill is due. You got to pay it. Also, read the fine print very carefully, because you may find competitive loans from the likes of Discover and Bank of America and Wells Fargo and whomever else your financial aid office at your college recommends to you. But in that fine print, that low rate may be an introductory rate, or it may balloon later, may have some balloon payment later. It may also become a variable rate later as opposed to a fixed rate. So please read carefully and make smart choices before borrowing money. And if you have questions, call us at 732-556-8220. We are here to help.